Alrighty, guys. Welcome back. Welcome back to the Rami stream, the weekly Rami stream. Apologies for last week, guys. I had a really hectic week, some family stuff going on, but all is well. So happy to kick this back, get things back on track. Okay, so just want to go through the typical process that we usually go through. I want to go through some trades that I shared over the last 2 weeks and explain the trades, the methodology, why we took them, what the results were, and yeah, just kind of go over them. Then I plan to go over BTC, big update there, and we'll go through a couple of indices, SPX, and we'll go through Brent. Maybe we'll have a look at gold as well, if that's of interest. Okay, so the first trade that I'd like to go over is this Ethereum long bounce that I shared. I believe it was around 10 days. When was this? This was the 27th of April, so it was around 8 days ago, around a week ago. Okay, so the thought process behind this was pretty straightforward, pretty simple. It's consistent with what I've been doing and what I've been sharing for quite some time now. As you guys know, I have two types of plays that I usually take. One of them is or let's say 75% of the time, I usually go for the 5 wave reversal, right? So the thought process behind it is you see 5 waves either to the upside or downside, and we're looking to catch the late shorters or the late longers, depending on which side you're going, and looking for a counter movement. Okay, so 1, 2, 3, 4, 5, then we get a bounce. Okay, now this is on the. It was much more of a scalp. It was in the lower time frame, 10 minutes. You could even call it the 5 minutes. But yeah, my level was here. Now I'll go through it bit by bit. Okay, so we had a clear 1-2 here, right? Remember, guys, we spoke about wave two. It stays valid as long as we do not surpass this high, right? So if this came slightly above here, it would become invalid and the count is gone and there would be no trade. Okay, so wave two is under wave one, everything is looking good. Okay, then we get our Fib extension tool, which you can find here under the Fibonacci toolkit. The Fib extension tool right here. The point is we're trying to find the relationship between wave one and wave three and wave five. Okay, so there are certain rules that I go by within my system. Okay, we're going over this again, and I want this to be, properly drilled into everybody to understand what I'm seeing, and so you're not so confused when I'm sharing my trades. Okay, so what we do is we measure the length of wave one. So you start at the top, in this case, because it's a bearish impulse to the downside. You start at the top, you go to the bottom of wave one, and then you drag it to the top of wave two. Okay, so then you're extrapolating it, you're expanding it, and you can see where your 1.618 and your 2.618 is. Okay, now I've been saying that I don't like to play any wave threes before the 1.618. All right, so as long as this 1.618 has been surpassed, we're good to go. Okay, we don't see any clear wave three end / wave four bounce here, so we'll happily call this the wave three. We see this slight correction, which looks like a three-wave A, B, C up. We called that wave four, and we expected one more wave down. Okay, now wave five, as long as it's below the 2.618, obviously we don't want to go too far away. 5.618 is pushing it, right? But as long as it stays within the structure and it looks decent, it's a clean 5-wave structure, we're okay with it, right? Sometimes you'll get shorter wave ones, sometimes you'll get much larger wave 1-2s, and it's not always going to be perfect, but the point is we want to see wave 3 after 1.618 and wave 5 after 2.618. Okay, now we want to look for a potential candidate of where this can reverse, right? We know that after 5 waves, we expect to see a counter movement to the other side, right? So where can this reverse? Okay, we've identified our wave 3 over here. We had some nice demand zone over here, got a little bit of a bounce, but this obviously got broken. Okay, so where's the next point where buyers and sellers fought and price reversed? So we had an order block or a strong demand zone, and it's pretty clear. even on, you know, the 10-minute or the 1 hour or whichever time frame you really wanted to look at this from. It was pretty clear. It was right here. Okay, so you can see nice little wicks. Bears tried to slam this down from here, weren't able to do it. Okay, many traders have different ways of calling this. I know that Blasto calls it R key, you know, key level, demand zone, order block, liquidity, demand. It's all the same concept, more or less, right? It's a place where price came to previously, and there was either a major reversal or there was a challenge between the two, a fight between the two. So we marked our demand zone, very nice, clear demand zone. Now, this one was a bit tricky, and I'm happy that I didn't cancel it. Wait, where are we? 10 minutes over here. Okay, so this one was a bit tricky because we didn't get to our level. Okay, so I'll just put the setup box there so it's clean for everyone to see. Remember, guys, usually after 5 waves, I target the 38.2 Fibonacci. Okay, I'll do this again so it's clear. After 5-wave structure, after any 5-wave structure, I target the 38.2% Fibonacci retracement of the 5 waves, of the length of the 5 waves. So you start at the top of wave 1, you go to where your expected entry is, okay, and you'll see the 38.2 is right here. Okay, so that would be my entry, the key level. The target would be the 38.2, and the stop loss is, I usually go between 1.8 to 2.2. So on this occasion, I play the 1.83 play, and let's drag this over here so it's clear. Okay, so we got the 5th wave down, everything ticking off, all the boxes are ticking off here. 1.618 was hit, 2.618 was here, hit. No invalidations in the 5-wave structure, and we're heading towards a key demand zone that we've identified is a point of interest where the bulls and bears have fought before and could be a potential candidate for a reversal. Okay, now we've identified our target, we've identified our entry, we've identified our stop loss. Okay, this one was a bit tricky, and the reason why it was a bit tricky, and sometimes I will cancel, sometimes I will say, okay, this just missed us, and it almost went to TP. All right, so this one actually I was very close to canceling. You don't want to keep, you know, it was a gut feeling in this occasion to keep it. I did see what BTC was doing in the rest of the market, and I did feel that a bounce was still coming. I wasn't happy with the level of this bounce so far, so I told myself, okay, if this cleared, if we really pushed up into here above wave 4, then for sure I would have canceled it. Okay, but until then, set my alerts, kept everything in play, and was just observing and watching. Okay, and we were lucky here because, yes, although it was just missed, we decided to keep it, and it came right to our entry, and there you go. Tap the liquidity, you have the late shorters going, oh, the support has broken, the demand is broken, let me short this thing down, we're gonna nuke it, 50x, let's go, right? Well, the market makers always have a nice surprise for you. They always punish the late entrance into the market, and whoever doesn't follow the golden rule of trading, which is do not short supports and do not long resistances, got punished beautifully here again. Okay, so this was excellent. I believe I took most of the profits around here in this trade. However, full TP was hit at the end of the day. It was good. I was very busy, and you know, I had shit going on, so I wasn't really able to manage this perfectly, but the system played out perfectly. We did make some profits here, so good. No complaints. Everything is looking good. Okay, it's the same thing again and again, guys. Okay, I have another example of this exact structure that I shared, which is one of our first stop losses, clean stop losses in a while. And we'll go over that. It was a hype short that I shared on the general chat. It wasn't on my channel. But yeah, so you'll see this a lot, guys. The structure will remain the same. You'll see me repeating the same things over and over, and I'm trying to be methodological and systematic about my system and what I'm doing, because we want repetition. Okay, we want something that we can just easily repeat. We have clear rules, we understand what we're doing, we see it, we know it. It should be very easy to know whether your setup is there or not, right? I easily go through 100 charts a day, easily. Okay, and at this point, I can just skim through them. Go in the 5 minutes. If I see a structure that I like, great. If I don't, next. Same with the 15 minutes. Same with the 4 hour. Right? You can do this on multiple time frames. Okay, so let's go to hype. Okay, so this was a play that I had shared on the general chat, and like I said, it was not a quick stop. I was a relatively quick stop loss. Basically, okay, let's go through the methodology. Same process again. All right, we have a very clear wave one and clear wave two, right? So what we're looking for right now is a potential wave three candidate. Okay, we saw this pump up to wave three and a pullback. As long as wave four doesn't touch the top of wave one, it's valid, right? We also can get our fib extension tool to make sure that wave three is above the 1.618, and absolutely it is valid. Okay, so what we're looking for is a place for this to reverse after the 2.618. Okay, same methodology, same concept, same idea. Okay, you have your wave one, you have your wave two, you have your wave three, you have your wave four. We know that after a fifth wave, we're expecting to see a reversal. Okay, now in this instance, I was able to highlight that there was a potential channel here. Okay, you have your two supports linking up, you have your high here, and I extrapolated it and pushed the channel to kind of create a potential zone. So what we're looking for is we're looking for more confluence and things and tools to add together to tell us where this could potentially reverse from. Right? You're not gonna nail it all the time, and unfortunately, in this occasion, we were wrong. Okay, and just want to go quickly over which supply resistance zone I decided to target. It was this. All right, everything ticked my boxes. This was the correct supply zone in my system to target. Right, maybe what would have been right to do, because I did see that this supply zone was active. I had it highlighted. I had my key level highlighted there, but I didn't want to lose the opportunity of missing this trade. So in this occasion, maybe the best thing to do would have been to go 0.25R here and 0.5R here, right? If we get stopped out here, we get another chance here. Because if it didn't stop out here, if it did get stopped out and this level didn't hold here as it did, then the chances of the next one holding is very, very high, much higher. Right? I don't want you to keep chasing the trade. That is the worst thing that you could possibly do. But when you have clean structures and you have confluence and you have multiple things adding up, telling you that you're expecting a reversal to come in, then you can, within limits, try again. All right. But the key thing here is not to go 2R and then 5R. Right? I'm talking about very, very small numbers, right? I'm talking about 0.51R, 0.25, 0.5R, right? Again, you can try twice, max you can try 3 times. If you're trying 3 times, make sure you start very low, 0.5, 0.25, 0.5, 0.75, or 1R, right? Max. Don't blow your portfolio trying to short something at every resistance and support. Again, you want the confluences. You want things to add up together to tell you there is a reason I believe that this is going to take place, and I'm being systematic about it. In this occasion, we had clean 5-wave structure. The 1, 2, 3, 4, 5 held. We didn't have any invalidation. Wave 2 stayed above the low of wave 1. Wave 4 didn't touch the top of wave 1. Okay, we had a channel. We had geometric confluence. So the channel, upper channel resistance told us, it looked. The arrow I haven't changed. This arrow is exactly how I had it, right? So we dragged on here for quite some time, reached the lower channel support and zoomed to the higher channel support. But I was thinking at this moment here that we had a good chance it was going to come straight for that. So, again, we're not going to nail it every single time. For me, I did everything right here. We got stopped out, yes, but at the end of the day, look, it almost came to our TP, full TP. So the assessment that this was cooling down and this needed to reverse was absolutely correct. The only thing that we could have done here that maybe should have been done was that we try again on the next supply zone. Okay, so we looked at our confluences, we marked our resistance zones, the 5-wave structure held, our Fibonacci expansion met its targets, and we went for it. It didn't, it failed on the first resistance that we marked, on the supply zone that we marked. However, have a look at the beautiful rejection right at the upper channel, right at the next supply zone. Okay, and now if we were to take it on the level above, okay, this is quite an expanded fifth wave. This is not your typical fifth wave structure. Okay, so maybe the correct count for this might have been an extended third. All right. So what we're looking for here, or what we're saying here, is 1, 2, and then 1, 2, 3, 4, 5 for wave 3. Then you get a 4, and then you got your fifth wave. All right. This makes more sense now. But you can't ever be sure. You can't ever be sure. You just have to put the probabilities on your side and take your chances and use good risk management. Okay. So if we were going to target this resistance level, this supply zone over here, it would have been the same concept. We would have entered at the key level. Okay, we would have targeted the 38.2 Fibonacci retracement. Oh. And we would have put a stop loss around here, around the 1.8, above this high. Okay, above this high with some room, because you always tend to see, how many times do we see swing fail patterns? Take the high out, swing fail pattern, come back in, right? So give some room from the low. The market makers love, stopping people out and reversing. They know where the stop losses are. They know where the liquidity is. They love to punish people that put their stop losses just on the support break or the resistance break. And they also love to punish late entrance into the market. Right? So people that were saying, oh, we're breaking here, we're breaking the resistance longing. Even the people that were longing from here, I mean, great, you would have gotten this pump and you probably would have posted 10 profit cards and been so happy, and great. How long did that last? How long was this? From 8:30 until 10. You were in profit for around an hour, right? And then where do you put your stop loss here? You don't really have much cover. Would probably be at break even and come back to break even, or you would have kept adding, it wouldn't have been great. Anyway, so this is the second trade that I cover. One of them was a win, one of them was a loss. Both of them were small in risk. They were both posted in the general chat. However, the point of what I'm trying to do over here is show you guys the process, the mindset, the methodology, what I'm trying to do, how I'm thinking, and I'm hoping that you guys can start to see the repetitiveness in my structure and the way I'm doing things from a very non-emotional, very mathematical, very scientific perspective, right? What we're trying to do is leave out all the guessing. What we're trying to do is make something so repetitive and boring that you know your system like the back of your hand, okay? And this is completely my system. Right? I took certain aspects of the system from different people that I learned from different books that I've read, and I've put it together. Every week I've been saying the same thing, guys. Your job is to see what works for you and put something together that works. Okay? Your job is not to just look and say, oh, I have to copy this A to Z. Right? No. There might be some things in Killa's system which you absolutely like and understand. You have to understand it deeply. Okay, you might take something from Killa, you might take something from Blasto, from Cedos, from Ryan, from me, from Minga, right? From other traders. Your job is to see what people are doing, how they're seeing it, and kind of have eureka moments in your brain where you're going, okay, I like that. I'll take that. I'll take that from his toolkit. All right, that's one of my components of my system. And slowly build a system that you're comfortable with. And how do you build a system that you're comfortable with? Again, we'll go over it again. Trading psychology, super important. You cannot build a system without data. And the only way you get data is through repetition and adjustment. right? You only build a good system by trying it out there, getting data, and then adjusting and refining. And you continuously do that process. When you're in the refinement and building a system process, your job is not to fucking go max port. Your job is not to make money. Your job is not to make money. And if you think that you're going to be making money by creating a system on the go, then you're just going to blow your account before you actually start learning what you're supposed to actually fucking be doing, right? You need to reach a point where you're comfortable and confident to build up size. Okay. Until now, I don't take trades larger than 1R. Very rarely. If I take a swing or a long spot position, yeah, sure. I'll go 2, 3R. Okay. But on my scalps, on my daily trades, on my 2, 3 day trades, I'm comfortable with 1R, 0.5, 0.25R. And for me, I'm still in the process, believe it or not, because this is a game where you're constantly evolving and constantly learning, and the market is always adjusting. Okay. My system I've been using for 4 years right now, okay, with constant refinements. Constant. Okay. The overall foundation of my system has remained the same. But I have taken my data after 30 trades, after 50 trades, after 100 trades, after 75 trades, after 200 trades, and put it on a spreadsheet and gone, okay, where were my losses? And where were they consistently wrong? And where were my mistakes? Right? Are you putting stop loss to break even too soon? This is an issue that almost every trader has. You know, a lot of the times taking profits along the way, and we've had this discussion in the group, taking your profits along the way, that kind of compromises your RR. But you also at the same time build an understanding of your system. You build experience in knowing what the structure looks like, what are the risks here, and is it the right move to be taking profit, right? And this is where I'm going to be going on to BTC. Okay. Now on the stream, we've been covering BTC extensively on multiple time frames, and we absolutely have been nailing it, week on week, 4 weeks in a row. We've been absolutely nailing it, calling this move from 76.5, 75.6, 60, 65.7, 65. Where's our level right here? Let's call it this. Yeah, right here. Yep. Okay. So we had the channel fake out. Remember, the channel was like this. We had the channel fake out, and we were calling for a channel high. Okay. Now this dragged on for a long time, so the channel high kept moving higher and higher. However, I adjusted it to something like this, and I also identified this as being potentially a. Let me delete this so it's clean, just so to show you what we did with the short that we were playing. Sorry, one sec, guys. Okay. So I saw this and I realized that we tried to break it before and there was good liquidity there, and the bears slammed this down really hard. Okay. We tried to do that again over here. All right. I marked this 78,700 resistance level as the first key point where I expect the bears to come in. All right. So we had our entry. We had two shorts. We had a swing short and we had a scalp short. We entered, and this took some time. We were in profit, and then we came back into our entry, held everything, got a nice dump. Okay, I think I started taking profits here. I locked in profits 3 times. Took profits here, 25%, around 75,500, 25%, and I actually got very close to the low when I took the last 25%. We also moved stop loss to break even. Okay, so I think there was somebody in chat going like, but why are you taking profit, along the way? Should you be doing this? Doesn't it ruin your RR? Now, the reason why I was doing it and happy to do this is because I knew that I had my scalp short, my swing short as well. Okay, and the swing short, I actually only locked in 25%. The stop loss remains at 84,800. So we have 75% of the position still in play. We locked in some profits before. Okay, so sure. Did this setup work? No, it didn't. If we actually look at it, it got stopped, right? But we entered from a position of strength. We entered with multiple confluences giving us a probability and reasoning to believe that the bears should slam this down here. And they did. And we locked in profits and we closed this trade in profit. All right. So no harm done. No harm done. If we didn't take any profits and we didn't move stop loss to break even, this would have been a straight loss. So in this occasion, it was the right choice. All right. In this occasion, it was the right choice. But that's not always gonna be the case. All right. Sorry guys, let me go quickly on chat. Okay. Yeah, so that's not always going to be the case. Sometimes you're going to make the right decision, sometimes you're not going to make the right decision. Okay? And as I said multiple times, try to keep it systematic. Try to keep the reasoning systematic. Try to have your reasons for why you're doing something the same. In this occasion, I took profits and moved stop loss to break even, and I was happy to do that because I had a feeling that this could have been a wave 3 extension. All right. And I also I knew that we had a swing short prepared. Okay. So I was fine with that. I wanted to lock in some profits. I wanted to close the month positive. We had a few trades that we entered last month. We did close last month positive, which is another month in a row that we have closed positive. It wasn't it wasn't a 10R month, which is my minimum target, but it was a positive month, right? It was around 5.2, something like that. I'll take that, right? A win is a win. I'll absolutely take that. We closed, everything is good, no problems, right? Now, we still have our swing in play, okay? Now, want to go over the idea behind this. Let me go on the 8 hour. Okay, so our initial idea for this short was that we have built a clean 5-wave structure, okay? And that was your wave 5, okay? Remember, after 5 waves, we target the 38.2 Fibonacci level. Okay, this time I extended it a bit. I believe that we were going to get to this support. That was my minimum expectation, but more or less around that zone. Okay. However, now things are looking a bit different. Right. So instead of calling this our wave 3, I'm starting to believe this count is still valid. Huh? I still believe that we will get a push down. I'm not 100%, and I spoke about this week on week, guys. You can never be 100% sure about whether it's going to go up or it's going to go down. You can have reasons to believe whether something is going to take place, and that's our job as technical analysts, as traders, is to put the reasoning, the methods, the reasoning, the confluences together, line them up to give you confidence in taking the trade. Okay, but now this is starting to look like this. I don't think that this 5-wave structure has completed and we've done like a wave 2 here. It's possible, right? So what I mean by this is 1, 2, 3, 4, 5. So wave 1, wave 2, and then boom for wave 3. That's absolutely possible. Okay, in the most bullish sense possible, but that's too shallow. In my opinion, that's way too shallow. All right, let me delete this. That's gone. This is way too shallow for our wave 2, guys. Okay, another reason why we can still expect to see the bears potentially coming in. This is an upper channel resistance, right? You have your 2 points here. You have your high here, you touch here, and we're right there. We're at resistance, guys. We're at resistance, okay? So yes, you can be bullish here, but is it smart to long this breakout? We know they love a channel fake out. We know they love a channel fake out. How do we know they love a channel fake out? Because we see it again and again and again and again. Remember? We spoke about this a month ago. We highlighted this a month ago. We literally targeted this high here perfectly, right? So I mean, Is the channel here? Now the question gets a bit, confusing. But Rami, where is the channel? If this was a channel fake out, then isn't that the upper channel? And now we're targeting this high, this resistance over here, or this resistance over here, right? Everything is possible. Okay, everything is absolutely possible, but we can't discount that this is a legitimate channel. Okay, we cannot discount that this is a legitimate channel, and when we have a legitimate channel and we're in a zone of resistance and we have 5 waves, we have to anticipate in advance what is possible. Okay, and at the moment, I see no reason why maybe maybe it'll stop us out and then dump. That's totally possible. In this occasion, I will look to short again. If I start to see a strong rejection around this level, I will look to short again. And if I do see us breaking up here, I will go for this channel and say, I have a really strong resistance here. I'm not that confident that this is done. I still expect that we're going to get a pullback after the 5th wave completion. That doesn't mean that we have to go to 60K. That means after the 5-wave structure, so let me just talk about this potential setup. After this 5-wave structure, let's call this wave 4, wave 5 up there. We're going back to basics, guys. 5-wave structure, we're targeting the 382, okay? So we're playing a scalp here. This would be the entry. This would be the stop loss. That would be the take profit. Okay, so maybe this is an extended 1-2, and we'll see your wave 3, your wave 4, and your wave 5. Okay, that's totally possible with a nice, big, fat, ugly fake out on the channel tagging supply over here. Totally possible. Okay. At the same time, guys, I'm not gonna stop shorting this 5-wave sequence here because I do believe that there is a scalp short. There is a scalp short brewing, the same way we caught it here. Okay, there is a scalp short brewing. All right, I will go for it again. That doesn't mean again that I expect 100% we're gonna go back to 60K. We could get a short scalp here with a rejection, or on this level, which is 85 points, 85,650 or 89,160, and reject, hold support, and then finally break channel with strength. That is possible. Our job is just to make money here, right? So we are looking for a place where we can get in, enter from a position of strength, maybe lock in some profits along the way like we did earlier to guarantee a win, and then move from there. All right, guys, remember, I am long on spot from 60K. I am long from spot on 67K. I've been very clear about my DC, that I was selling 50% of my portfolio between 110 and 120K on BTC, and that I would re-enter at 67, 60. I have other bids at 57, 54, 50, and 48. Okay, so I still have those bids. I have not removed them. We can go over why I have not removed those yet. However, we are starting to enter territory where it's like, I need to prepare, right? Because I don't want this to go break the channel and I'm not repositioned. I filled 2 out of 5 entries. Okay, I did great because basically selling at 115 and rebuying at 60K gives me 2 Bitcoins for every Bitcoin that I sold. Okay, and that was the aim for me. The aim was to stash Satoshis, okay, to stash BTC. So that worked. But if it goes and I haven't filled the other 4 limits that I have, then maybe overall my and we go to 200K, then maybe I've actually lost out here, right? So I need to manage this in a smart way, in a strategic way. I don't want to panic. I want to be very logical about what I'm trying to do and why I'm trying to do it. And I'm going to keep you updated as we progress, as always. You guys always hear it first. All right. So we have a few ideas here, guys. We have a few ideas. Either we reject this channel here and this supply was just a big fake out and we come back down, swing still in play. Or we continue to this supply over here, bigger channel fake out, and come back down. or we continue pushing up, maybe get a little rejection here, and finalize and push down here. Okay, I don't think I'm going to short this. We already have our swing short, so I won't short it on first attempt. Okay, well, maybe if we get a rejection and I start seeing some structures breaking, I will look to enter. If we break back into the channel, for example, I will look to re-enter and play it again if we get stopped out on our 84.8 stop loss. Okay, now we have, I think, around 0.4 R at risk for the swing. It's not much. We already locked some profits there, not much as well. But yeah, we just have to keep assessing, keep updating, and keep adapting to the market and information that it's giving us. Okay, so this is the way that I'm viewing BTC right now. I'd like to take this to a higher time frame. We always go to the higher time frames after we dig into the lower. Okay, guys, nothing has been broken here. Okay, nothing has been broken here. The assessment that I had was this was my invalidation. This is starting to look like a really bad wave 4. Okay, you had some people, including myself, that were saying 1, 2, 3, 4, and 5. Okay, this is already starting to look like an ugly wave 4. All right, this is already dragged on. Okay, if you take this out here, that's not very nice. All right, that's not. However, it could be valid. You have to be a bit lenient. Okay, you have hard rules that we stick to. Wave 2 can't go above wave 1. Wave 4 can't touch the top of wave 2. Okay, this is already starting to look like the count is wrong. Okay, it looks like the count is wrong. It's starting to look more like we either built an it's starting to look like we built a 1, 2, 3, 4, 5, okay, followed by an A, B, C, and then dump again. All right, into our, remember, I told you my key and main support is this 54K. Okay, I'm loving this liquidity. I'm stacked. I have 57K, I have 60K. I've already filled 60K right here at the low. I have 57K, I have 54K, and I even have 48K in case we dig deeper. Okay, but this is starting to look like 1, 2, 3, 4, and 5, followed by an A, B, and C, 3-wave corrective structures. Remember, usually corrections are in 3-wave structures. Okay, and wait, let me do this. Okay, so when you have your 5-wave structure, 1, 2, 3, 4, 5, we play the counter movement, right? And when we play the counter movement, we expect to see something like an A, B, and C. Okay, 3-wave corrective to every 5-wave impulse. Okay, but the Elliott wave can get really complicated. And what do I mean by that? Is that the A, B, C can look differently. Okay, and I don't want you guys to, unless you're really into it and you want to learn and you want to go through it, it's great to know. Okay, but I don't want you guys counting everything and trying to make everything work, because we're not here to solve puzzles. We're here to make money. Okay, so you have to use the tools that we have to make you confident in taking a trade. Okay, but what I do want to explain over here, just to give you an overall analysis of what I'm thinking, is that you have your A, okay, you have your A, you have your B, and you have your C. Okay, now you have your 1, 2, 3, 4, 5, 1, 2, 3, 4, and 5, right? Now, in your A, you can see 5 waves. You can see an impulse. Sometimes, okay? It's quite often, but it doesn't always have to fit into this, okay? A B wave is always a 3-wave corrective structure, okay? And then a C wave can also have a 5-wave structure, okay? So this would be your most common look, 5, 3, 5, all right? And what I'm doing over here is I'm saying that this could be our A, right? So what I'm doing here is 1, 2, 3, 4, 5. A, let's call this an A. Okay, you have your A, B, C. Let's call this our B. All right, it's a bit confusing, so let's change this into okay, just to make this a bit cleaner, we have 5 waves down. We'll call this an A. Okay, then we have an A, B, C. We'll call this our B. And then you have your C leg down. Now B usually goes to the 61.8 Fibonacci level, okay? But it doesn't have to, right? What we're looking for over here is to identify the key resistance zones. So key resistance zones are all of this, unfortunately, it's quite wide. We have this, and we have this, all right? And like I said, Elliott wave theory can get very confusing. We could even have an expanded corrective structure, an expanded flat, for example, where the B wave makes a fake out on the A wave. People long thinking that it's the start of a new impulse, and it comes back down. And actually, we have a good example of this. This being where here. For me, this was our B wave, right here. Okay, you had some people saying that this was 1, 2, 3, 4, 5. That's possible as well. Okay, but for me, I was seeing this as 1, 2, 3, 4, 5. A expanded flat fake out on the A, so wave B, and then your C leg down. So do you guys understand what I'm doing? If you look at this structure over here, right? A, B, C. Okay, right? If you look at this structure over here, compared to what we're doing here, what we just did here, right? The only difference is the B wave was here, right? It's exactly the same thing. You had 5 waves, you got a dump. This is the importance of Elliott wave theory. Until now, I haven't seen any tool out there that gives you the ability to know and to understand and to feel when market is exhausting, when the market is exhausting to either direction. There is no tool out there that helps you understand when a market is close to reversing. And that's why it's so crucial to understand Elliott wave theory on the higher time frame for market analysis. And the way I use it and the way I've built my system is I've seen that it's so strong that I began experimenting with it in the lower time frames. And sure enough, and as many of you have seen on multiple occasions, it fucking works. Right? I don't care if it's the seconds, I don't care if it's the minutes, I don't care if it's the half an hour, I don't care if it's 4 hours, I don't care if it's the daily. Okay? We constantly see 5 wave structures followed by a retracement. All right? Our job is just to kind of understand and put a system together of where this will reverse from. And that's the reason why I have the other components in my toolkit. My system is based on 5 components. As you guys always see, I always keep repeating, right? You need A, B, C, D, E for it to be a trade. If one of them is missing, forget about it. I'm not taking it, all right? Just going to keep repeating myself and saying the same thing over and over, okay? Because it's important, right? So going to delete all this, guys. I hope that was beneficial and you understand the core mechanics of Elliott wave theory, the impulse and the corrective. Those are the 2 things. Impulse, 5 waves, corrective, 3 wave. Those are the basics. It can get more complex, yes, but for now, just focus on that, okay? We cannot be sure of where this will stop. That's the issue with expanded B waves, right? We could be thinking that this is an expanded B wave and it could keep shooting further up into a proper new impulsive structure. Okay, so that is why I am already DCAing. That is already why I am back into the market. I already spoke to you guys about this very, very clearly. The 2 ways that I can see this playing out on the higher time frame, okay, is, again, guys, I hope you're starting to see this. 1, 2, 3, 4, 5. All right. Okay. Or 5 here. You had an extended 1, 2, 3, 4, 5. Or 5 here. And you had an A down, a B up, and a C down. That's also possible. Right? That's why I don't want to discount anything. I don't want to be so sure about anything. This could be your C5 waves, and this goes up. Right? This starts a whole new impulse. Okay, so I'd like to remind you guys of my 2 primary ways on the higher time frame. I'm not trying to be so perfect with the prices here. Okay, either we did an A, B, C 3-wave corrective structure, and this is the bullish case where we have 1, 2, 3, 4, 5, and then we continue impulsing. Okay, very possible. Not my primary, to be honest with you guys. Or we have our A, we have our B, right? Not trying to be so perfect where this could go, maybe somewhere like this, and your C wave down. Okay, now 54 is my preferred zone. I do believe that we will find great support over here. However, like I said, we have supports at 40K, we have supports at 26K. As long as we stay above 15K, 15,400, this structure, this impulsive structure is intact. So I wouldn't be surprised if we end up doing something like this. This is my primary count. Okay, you have 1, 2, 3, 4, 5. You have an impulse, and I want to go back to this again, guys. The only people that understood that we were coming. Okay, you have people that have their own mega Chad brains like Killa and others that have their own methodology on understanding market cycles and the way it's viewed. Killa does. I did see him count this. I did see him count 5 waves here, but he uses multiple different things in a very, very effective way. Okay, but every Elliottician knew that we were coming close. Every Elliottician knew that this was gonna dump. Why is it so hard for people to understand that technical analysis actually fucking works? You see it here, 1, 2, 3, 4, 5, dump. Even if you thought that this was the wave 3, you had a wave 4, you had a wave 5, dump. You see it again and again and again. Over here, just now. 1, 2, 3, 4, 5, pump. You see it again and again and again. So don't let anybody tell you that technical analysis is some pseudo retarded science that doesn't work. It does work. Not that it's perfect. Price action is not perfect, but it's also not random. Okay, you guys have to make sure that you understand that if you put the effort in and you believe that you can actually gain an edge on the market, you absolutely can. And you see it time and time again. 90% of people fail, 93% of people fail, right? But 93% of people give up way too fucking easily, right? Any business that you launch, whether it's a restaurant, a small tech company, whatever, the chances of that failing are very, very, very high. Like if you have a win rate of 60% on your trades, you're automatically in a better situation than most entrepreneurs that start a business, right? I have so many friends here in Lisbon that have started restaurants or have started this, that have started that. Some of them have made it huge. Some of them have had to adapt and change. Some of them had to close. Some of them had to completely remodel their business, right? This is the business that we chose. This is the business. This is our game. This is our sport, okay? And just like anything else where you don't know what the outcome is going to be, there is a level of risk, there is a level of gambling, but the important thing here is we're not gambling with emotions. We're not chasing the money. We're not in a casino table, okay? We're trying to do this very methodologically. We're trying to do this systematically, logically, and keep a process and stick to our process and stick to our rules, okay? That's the fucking most important thing, guys. Okay, so you guys understand what I'm looking at over here. I can quickly go over just a quick reminder. Okay, if it breaks 15,400, everything that I spoke about here invalidates. Okay, if we push down here, I am expecting another pump. We can also pump from here. I am expecting 200K plus. I'm extremely bullish on BTC. I'm a long-term believer. I'm a long-term holder. I do believe that BTC will reach 200K plus. Okay, and I think plus, right? If this is the start of a new impulse and we ABC out here, where we can go, guys, we can really send it. We can really send it. Okay. So we'll have to assess as we move. I'm prepared to hold BTC for the long term. I'm a big BTC bull. There is an interesting channel that I highlighted recently of where this could top out. Okay. Right? This is not a bad place to look at. You had your fake out here, you had your bounce here. Why not? Right? I would presume that if we break this channel and test it correctly, then we also have to reassess things a bit in a more bullish scenario. Let me go over ETH really quickly, guys. Just to no, let me go ETH USD. We have yep. Okay, guys, things remain the same here for me. I'm expecting one more low on ETH. Doesn't have to come. I'm expecting one more low. I really like this channel. All right, I like this liquidity and support, and then go. Okay, that's pretty much what it is for me. We'll have to assess this if we keep pumping here. We could get something like this. Also valid, right? Or if BTC keeps pumping from now, we could go from here. Okay, this is the least likely scenario for me, in my opinion. Okay, I am seeing a 5-wave count here. Okay, this could be 1, 2, 3, 4, 5, but it might not be done. It might be a 1, 2, 3, 4, and a fifth down. I really like this liquidity over here. This is definitely max pain, and max pain is where the market makers will take it. And yeah, that's pretty much it. Again, the count here was pretty straightforward. The count here was pretty straightforward. We had a 1, 2, 3, 4, and 5, followed by an A, B, C. Okay, so this could actually be your wave 1. This could be your wave 2, and then we fucking send it, boys. We send it. All right. I'm not a big fan of every crypto. I don't hold anything except BTC. Right? But if ETH does come down here, I would be happy to take a trade that kind of looks like this. All right. You got a good RR there, boys. Do not panic if we get this opportunity. Okay? And actually, put your fucking limits in from now. Put your fucking limits in from now. How many times do we see exchanges crashing at max pain events, max liquidation events? You cannot buy. If your limits are not in, you're fucked. You're gonna, by the time you want to get in, price will already have filled all of these orders, and you'll have a nasty wick here, and you'll be back here. Okay, so if you believe in ETH and you believe that this is how it's gonna play out, I'm gonna be doing that. I'm gonna be stacking my ETH. I can my limits, and I'll tell you guys exactly what limits I'll be doing. If you guys want to follow, that's your call. Okay. Now, Brent, we've been following Brent. I think my assessments have been pretty fucking solid so far. Pretty good. Yeah, I mean, ceasefire, no ceasefire, right? And the news is just there to confuse you guys, okay? We spoke about the differences. We spoke about how there are still major obstacles between Iran and the US. We spoke about how Trump is manipulating the market and by falsely claiming that negotiations are positive and all of this nonsense that he constantly spews. And we spoke about how my main count is a wave 1, wave 2, wave 3, wave 4, and wave 5, and we pretty much nailed it. I mean, if you were looking to buy, at 90, I was talking about 90 being a good buy in the first weeks. You're already up. 25%. Okay, I do believe that we will get all-time high, and I do believe that the market makers will reverse this. Ceasefire will come after all-time high. Okay, we're gonna get a nice liquidation. We're gonna liquidate a lot of shorters. We're gonna liquidate a lot of shorters. All right, all these people that are shorting and putting their stop loss right above the high, we're going to liquidate them, and we're going to liquidate a lot of late longers. As you can see with the arrow out here, we'll trap them and reverse it, and they'll be stuck and they won't know what to do. Okay, let's stick to plan, guys. We have a good plan. It's playing out so far. It's pretty fucking crazy how using and drawing a bunch of tools on charts allows you to predict the future. It doesn't make sense to me sometimes, but it works. It works. It's worked multiple times, and honestly, there isn't much to believe. There isn't much to believe with mainstream media, with all of the news and the politicians. So why the hell should you put your, base all your assessments on the market on what they're saying, right? I think technical analysis honestly can tell you what's going on much more than than what Trump can, right? Some traders say, show me the news and I'll show you the chart. Other traders say, show me the chart and I'll tell you the news. I try to block most news out. I try to ignore the news completely. And I try to stick to my technical plans, and it has benefited me. Okay, there are times where if I post a trade 1 week before and it fills, and FOMC meeting happens to coincide exactly with where my freaking entry is 1 week later, I'll remove the trade because of that. Okay, because things are unstable, or if I see things are really shaky or unstable, I'll remove my trade. All right, or I'll move it to break even. But very, very special circumstances. Okay, quick on SPX. Here we are, boys. Here we are. Don't call me a perma bull, but I believe look. Warren Buffett came out a few days ago saying that in his lifetime there have been two 50% plus crashes in the market. And people don't talk about this. And he doesn't only say this, he says 50% plus corrections. We were able to time them quite well, not perfectly. I think Warren Buffett got out around here, most of his cash. So he didn't time the market perfectly. It's still pumping. But that's what a fucking good trader does. That's what a good investor does. Okay? He's not trying to grab every little bit of profit. What he's trying to do is get his profit, play to his plan, and then stick to his plan and hold his cash when he believes the market needs a reversal. And I believe he's absolutely right here, okay? He doesn't only say that if 250% corrections happen, he also says that in 2 days, no, in 1 day, the market crashed 30%. Right? You get these major panic events, right? It's a staircase up. You get a staircase up, right? Where it's just months and months and months and months and months, right? And then you get like 1 day where things are fucking down 30%. Okay? The only people that will be able to catch this, the only people that will be able to make the smart money are the ones that have removed their profits and plugged in their limits into the system. All right, because again, the exchanges will probably crash. There's going to be Robinhood is going to halt trading, all of this scam that goes on. You got to play and stick to your plan. All right, guys. I think that's pretty much it. I covered, a few of the trades, the methodology, basic Elliott wave theory, market psychology, trading psychology, covered BTC, covered ETH, covered Brent, covered S&P. I hope you guys enjoyed the stream and found it educational and beneficial. And I will leave a little bit of time for some questions if you want to ask in the chat. Happy to have a look. If not, then I'm always available for you all. I'm always available for you guys. If you ever want to ping me in the Apex room chat, I'm happy to look at some charts. If you guys find five-wave structures, please send them across. That way we can both trade them and both make some money. So yeah, thank you for joining, guys. Appreciate it. And I will see you next week. Seems like there are no questions here. Going once, going twice. Sold. Cheers, guys. Take it easy.